Talk about your money and how the elections could impact that over the next few days and weeks. The markets will certainly react to the results or lack thereof of today's presidential election. But what does it mean for your finances? Stewart Welch from the Welch Group joins us now by FaceTime with some help on that. Good to see you this morning.
Good morning, Mike. This is an exciting and important day, and I hope everybody will exercise their privilege and go out and vote for their favorite candidate. It's really important.
Yeah, definitely, absolutely. Now, let's talk about, though, what could happen to your money. We know a lot of people are concerned. We've seen volatility in the markets even before this election. Could probably happen afterwards as well. What are your early thoughts on that, though, when you look at what has happened in the past when certain candidates won and others lost?
Well, I think the first thing is we are not likely to hear a concession speech tonight. So that means this is going to roll over into tomorrow. It could be days. It could actually be weeks before we know who the actual winner is. If there's one thing the market hates, it is uncertainty. So I do anticipate there could be a lot of uncertainty. And a good example would be to go back to the presidential election of 2000. That was Bush versus Gore. That actually did not get decided until December the 12th by the U.S. Supreme Court. And during that time period of uncertainty, the market was only down about 4%. So I think that what I would say is that, first of all, people should not panic. We should expect some potential volatility. But I think in the long run, whoever wins, they're going to be spending money, and that's going to be good for the economy. So my anticipation is that over the next 12 months, by the end of next year, we're going to see the market up above where it is today.
Well, we were talking during the break. Warren Buffett says he's not concerned who wins his presidency. He feels like, we're still going to be in decent shape financially. But, you think about how far we have rebounded now during this pandemic, and we just heard the numbers on the GDP. It does lend itself to tell folks that, hey, maybe you shouldn't hit the panic button and try to do something, too risky right now or make a move right now. Is that what your advice is right now?
It is exactly. I think, when you look at what's really happening on a real macro basis, these companies are still selling goods. They're still selling, whether it's toilet paper or toothpaste or hamburgers, or they're selling Home Depot, they're selling goods. They're still going to be out there rocking. And I do believe the next president's going to be a spender, whoever it is. They're going to spend hopefully on infrastructure. That's going to be good for the economy. It's going to be good for the stock market. So I would definitely stick to my guns.
All right, Stewart Welch from the Welch Group. We always appreciate it. Thank you, sir.
Thank you, Mike.
All right, still ahead now. We're going to take a break.